The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Thursday, the what? Thursday, the 16th of January. So we're looking at the Dow right now, down 95 at 43,127. UNH really was part of the pick. UNH, not UNG. UNH, what's UNG doing? Oh, nice move up in UNG. UNH is United Health. United Health trading down 18 at 526, down 3.3%. Yeah, it went right to the 200-period moving averages for 3 sessions, and it just got repelled. That's more important, I think, than earnings or anything else, because it tells you that 545 is like a magnet line, but if it goes below 523 and stays there, that becomes a propellant to the downside. So we're going to be watching this very closely because it does impact the Dow. Yeah, it's some really good moves in the Dow. I mean, JP Morgan yesterday, earnings came out. There it is, all-time highs as we speak, 250, 6.48. You've got, Goldman Sachs. They haven't come out with earnings, but they had a really good rally yesterday, a gap up. I think they did have earnings, but anyway, they're moving really nicely now to an all-time high. 615 was the round number high. What did I see today, round number high? What was the stock? ZBRA. Yes, Zebra Technologies had a 615 round number all-time high back in November of 2021, and it had a little bit of a tumble down to 200 back in 2023, coming back quite nice. Anyway, I just thought once some trigger in my mind, I have to follow through. So here we go. So we've got the Dow, we've got the S&P. At this particular point, the S&P is trading, is coming back. It's now up 39 cents, 59.50. I'm going to talk about the Dow. I'm going to talk about the possible match with 2024's November kickoff, and then we came all the way back, took out the low, a big arch formation. And I had a question when I was interviewed by Jacob on Tuesday. I said, I think this. I have to call this right now a low, not the low, but a low. And then there's a chance that we're going to have to do a retest. It's like an earthquake where you have the earthquake and then the aftershock. Sometimes the aftershock is less, sometimes it's more, sometimes it's the same. So I'll talk about that in a moment. Now let's go to the S&P has a tremendous amount of resistance as it gets to 6,000. It's way under now. It's at 59.47, but just keep that in mind. And one of the reasons why I want to mention it is because there are lower highs. Remember the falling axe formation, lower highs and much lower lows. But at a certain point, if it turns around, you could be making a cup formation, and that's the possibility. I'm going to draw it in here, but at this point, I'm not 100% convinced. Not 100%. I'm 70% convinced that we're going to see the S&P try to test the 6,000 level. But when you can join the highs of all the wicks of candles on the decline, and then you make a little tiny channel with the two trend lines, parallel trend lines, and that gives you a sense of where the price gets repelled. That's all I'm saying. And that's the area that if it goes there, that's what's going to be very important. Why? Because that pink 9-period moving average is still very ugly. It's not very good. It has a long way to go. The MACD, as we speak, is minus 1.33. The histogram hasn't crossed positive. As soon as it crosses positive, that can give another impetus to the upside. All right, there we go with the next thing. The QQQ, NDX 100, right at, now I can do this. I didn't want to do it before. It doesn't have to be 100% exact. Some of it is, you could do it automated, charting-wise. A part of it, though, I just do so many things by eye. I'm always very visual, so to me, I do that even better than when it's automated. And here it is. You're right in the sell zone of this is the sell zone of the QQQ. And the QQQ itself is trading minus 12 at 516.52. Without the Qs running strongly, I'm going to go to my thematic material in a moment. That's why I'm saying I have to still consider that there could be an arching over, and we need to see Friday's close going into Tuesday. I thought Monday, of course, Monday's a holiday, going into Tuesday. So that's the QQQ. IWM, slightly different pattern. This pattern has a trend line. I can join it like that. It's still out there in space. It's way up in the 230 area, 232 area, and here we're trading at 223. But I just put it in to show you how it would work. And then there was this body of downward motion that contained all the prices. So that way I'm going to expand it as a larger decline. And that says the area of 226 going into Tuesday of next week, if we can get into that, if the IWM, the Russell 2000 can get into it, that'll be fabulous action. Let's go now to gold. So gold is up $30.05 at 27.48. I'm going to include this with crude oil. Crude oil has gone to a new recovery high above the Chapman Wave inside track repellent zone, done very nicely, way above it for 2 weeks now. But we've still got Friday to go. That's a long time in the market. So let's see where crude oil closes Friday. But what's really important, now I can talk about this. I had spoken about, for quite some time, I've been discussing the idea that the gold, the GD, General Dynamics, the Raytheons, LMT, which is Lockheed Martin, the whole defense area had come down so sharply, and this is for weeks and weeks and weeks, that it was probably suggesting that there was some kind of a peace negotiation that's going to be attempt to be successful going on in the Mideast. As we've been looking at crude oil since early December, going from the 65 area to the 78s where it is right now, 78, 79, and gold going in the same period from mid-December from the 2600 to where we are right now, 2746. It says to me that you cannot rule out the possibility that those talks that are going on right now, and they're supposed to be signed last night and all that, are going to stall, waiting for the new administration. That's what the chart seems to be saying to me as I read it, and that's just based on Mideast, my interpretation of what's going on through the market, if I'm able even to discern a theme that is going on. That theme says to me, yeah, maybe there's a delay. And the delay is going to forestall any negotiations and all that sort of thing. So I'm looking at this and I'm saying, I'm watching gold. Now, it could be for other reasons, because gold and silver, gold can sometimes move by itself, but gold and silver together, moving up like this. Oops, what happened to my silver? There. Yeah, gold and silver moving up together. Silver is up 17 cents at 31.70. I'll talk about that when we return, because there are a couple of other themes I want to get to, and that is that some of these commodities, the charts are really starting to look quite good. I'll be back in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Yes, so we're back. So let me just do this because we were talking about gold and silver. Now look at this high-grade copper. Very nice move up from the $4 level to $4.43. I had mentioned to my subscribers that there's a kind of a rotating phase going on right now that's starting to see a lot of activity. I mean, look at this. Look, here's wheat. There's a commodity, wheat. Trying to come off the bottom. Doesn't look too great, but wait a minute. Look at soybean. Soybean has attempted. It's gone to a peak D just under the 200-period moving average. That's a good start. Look at corn. Different chart altogether. The weekly chart went to almost the 200-period moving average at 485. Here it is at 474, down 4.5. I didn't update it. This is a peak D right here. Okay, and that's an E, and it's stalling at an E. And that's really important to me. Just looking around, look at palladium. Palladium had a very good move to the 200-period moving average, pulling back, but trying to base. And that's what I'm saying, that I'm looking at this, I'm saying, oh, this is interesting. Copper, oops, let's go to coffee. Coffee had this incredible move, and the monthly chart went to a peak F. It could be an alternative count, but I'm calling it F for now. In the monthly, F in the weekly, could be a brand new move to the upside, could be B, but everything is very positive. The daily went to a peak F and is stalling. Look at CC. This is cocoa. Cocoa went to a peak F daily and pulled back. Now it's making a possible arch formation. The dreaded H went to a peak E in the weekly and only a peak B, a massive move from the lows. This is incredible in the futures from the September low of 2022 to where we are at 10,601. It actually went almost to 13,000. So there are things going on that I believe at this point are pretty interesting and very important to the outlook going into maybe the first 3 months of the year. Okay. Now let me just get out of that. I want to go to this. So let me do this. I was talking about gold. So I had a question about Newmont Mining. Newmont Mining is Newmont Cores, now it's called, gold miner, had a very big spike up to 86.37 in April 2022, comes tumbling down to the 30 level, spikes up to almost 60, and then comes back again. And now is trading in the weekly chart from that peak D top in the 50s, comes down, and it's in a leg A. And you can see the stochastic has a long way to go. It's at 8%. The MACD is still, the histogram, the vertical line, is still very negative, and the 914 very weak in the weekly chart. But look at the daily. Daily's gone to a leg C, so this is looking much better. So the question is just Newmont Mining. Newmont Mining has key support it's at 4202 right now. I would put that support in the middle of this. First real support would be in the middle of this candle right here from yesterday. If I can get this mouse, which I just grabbed. Oh, upside down, that's why. Go to right there, click, okay, right there. So if it closes in the next few days below 41, it's at 41.99. Then you've got to be prepared that it's going to test the bottom of the candle, which is at 40.33. If in the by Tuesday or Wednesday of next week, it's gone underneath 40, that's a problem. Now, on the upside, the left side, I could do a left side, right side price time match. I'll just do it visually. It says by tomorrow, there should be a test. Tomorrow is Friday. Yeah, by tomorrow or Tuesday, because Monday's a holiday, there should be, there's not a holiday with the gold contract, but it's a holiday for the anything that is traded on the American exchange. So 42.52 is the high, and that 42.52 is the first real. Let me open this chart so that you can see it better, because that's where right, 42.52 is right there. That is the high of, 42.52 is the high of the 11th of December. If it's able at any point in the next week just to tag once 43.70, then there's a really good chance that the 200-period moving average of 44.09 for the very first time since it broke down, since November the 5th, hitting that 200-period moving average is now a declining 200-period moving average. That's the first time it's going to be hit, and that'll be very important. So it's a work in progress. The 9-period moving average cross positive, MACD's positive, stochastic fabulous at 87%. On balance volume, I would say is lagging, but maybe that's a good thing because it's taken so much time to come down. If it can take time to go up, it gives it a lot of room to get to that 44 level, the 200-period moving average. So far, this looks very positive. On the daily, the weekly is improving. Monthly chart doesn't look good at all. Newmont Mining, trading right now at 41.93, up 56. Next question was AVGO. This is Broadcom of Avagio. Nice bounce today. I believe that it's kind of stuck in this rectangle formation that I drew in some time ago. It hit a round number, 251.88 was the high on the 16th. It pulled back, and when it tried to retrace to get there, it hit a 240 round number open and then pulled back at a 245 round number open, pulled back, and it went to a low just 4 sessions ago of 219.51. Just seeing if there are any round numbers here. And now it's just spiked to the upside. Now, sustaining any spike is really the issue. That includes the general market from yesterday. So the estimation is that a big spike yesterday, but in fact, there isn't a gap. Yes, it closed at about 245. What is it? Thursday. On Tuesday and Wednesday, it had a really strong move, but it filled the gap. It gapped up in price, but the actual candle of Tuesday was tagged at the bottom when it gapped up. Today, it's a full gap. And that just says to me, remember the rectangle pattern that we were looking at? We were looking at it in the gold chart. And I said, this is not a negative pattern. It's not a positive pattern. So you have to look at and say, what are the strengths? What do you see that could be very positive? Well, look, under all this duress of going sideways, that green 9-period moving average hasn't once flipped to pink in the weekly chart. That says let me just do this. The weight of evidence, if you look at this as a midpoint, you see this trend line that I've just got right? Look at the left side where it goes through the rectangle, and that's at about 250. It says in the next week, if there's a close under 250 on any day, that's a negative. But using that as a springboard, it could see a test of the most recent high of 263.58. If in January, the semiconductors go to 265, that's very good action considering that they've been a little bit under duress, and they're rotating. Look, NVIDIA, it just hasn't been able to break to the upside. It's got a nice pop today. It's giving back some. It's up $1.25, 137. This is not the way NVIDIA acted back going in June to the July high. This is the June high of the week of the 4th of June at 140.76. And then again, that big move up going from October into the November 21st high, and then the double top. So it's changed character altogether. So I'm saying to you, yes. So I don't know quite what the question is for very short term. Okay, so now let's do this very short term. We're going to go to NVGO and AVGO. So many charts today. Okay, so it says in the near term, day trading is really good because it pops up and then it gives it back. It pulls back and then it goes back up. So if we've got a break coming up. Let me just get to the 120-minute chart. When we return, Basil Chapman, Tiger Ignitions Hour. Dow's down 109, S&P's down 5 1/4. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Did a peak D twice in the 120-minute chart. I would think that this is just a bounce, and then you got to monitor it carefully because if it takes out certain support, it's going to pull back a little bit more. Arca Quantum was a question. ARQQ made a peak D in the daily chart back in mid-December, and in the 54 area comes down, hits the 200-period moving average. Very strong bounce today, leg A. And this is what I think is happening right now. So you've got it wasn't a flurry. It was a lot of activity in the whole quantum area, and then you got this. And we've always got to be careful. With some of us who have been in the game a long time know that when you get these meme type stocks, at some point they give back 20, 30, 40, 50, even 60% just in an eye blink. So you have to trade them. Core positions are on really big pullbacks. One of the reasons why I say to subscribers, we want to get the outer limits. We want to get the edges. Because if you get the edge, you've got room. For instance, when we got that low in the Dow on Monday, it just replicated the same thing that we've done many times when we've got the lows. Back in 2009, the Friday low, the 6th of March, we had a room to spare because once you get the low and there's that big spike up, then there's that whole volatility. Is it going to arch over? And everyone was expecting a retest. It made a V-shaped recovery. Other times, you get almost a test, and if you can get that low and you're still holding it, if you can get through that volatility and see the price either move up if you're long or short if you're moving to the downside, if you get the edge, it just gives you some breathing room. So that's the same thing here with these quantum type stocks. So look for icons. Look here, I didn't see this at all, although I've had it notated for a little while, but I didn't notate it the last week or so. It went right to the 200-period moving average. That's nice, from 15 to 29. I mean, a double. And that's, part of your portfolio certainly can include some kind of hysterical behavior if you understand it and you treat it with a small amount of money, saying, okay, that was... that's just a trade. That's all. Got my stop in. I know exactly what I'm doing. I know what I can lose. That's the best way to do it. Okay. So I'm coming back to the idea right in the beginning that I mentioned of, is this a V-shaped low that's going to the all-time highs? Is it going to be arching over? Is it going to be a retest? And I'll talk about that as soon as I can, because I had other questions that I wanted to get to. FXI. Puts and calls. Oh, no, I think you had... Yeah, you wanted to see volatility and premium on both sides dissipate. So it's right on the 14-period moving average, down 2 cents at 29.80. This is the FXI, iShares China large cap. I think this is in a waiting mode. It tested for 2 days. It tested exactly the 200-period moving average. When last was it there? I mean, that's the beauty. Look at this whole series of tests back in August to the September 9th low. And then it screamed up to a peak D from 2025 all the way to the 37s. Doji candle comes back with a gap down. Woof, dreaded H, just keeps doing that. I would be careful, because the FXI is saying, the China large cap ETF is saying, we're not sure what's coming up with the new administration. We can guess. We've been there before. Now you've got someone who doesn't repeat what he's done before, because that's what he does a lot. But he has a kind of a flexibility within his own thinking that says there's a convenience, there's a pragmatism as well. So that's why I think the China iShares is just kind of lolling towards the lower range that it's been in. I would put it this way. If a week from tomorrow, Friday, if the FXI has even once just tagged 30.75 up, getting close to the 31 area, it's at 29.80 right now. Any day it does that without following up with a retest of 29.60 or no, 29.50. That would be a really good sign. But if at any stage it goes underneath the low that was made a few days ago of 29.35, I mean, it doesn't sound like much, but this is now trading in a much narrower range. If it goes under it, it says, be careful, we could take that 200-period moving average of 28.70 again. So all I can say to you is right now, all the technicals are negative. Therefore, I'm saying to you, in order for it to rally, I have to see the technicals improve. I'm not going to guess. I'm going to tell you what needs to be done. The impressive thing is, with all of this, the 9-period moving average in the weekly chart is held. And that's why I was saying it's in a wait-and-see attitude. And you can tell right now, because if we get to the 29, 30, or 30 level next week, all of a sudden you're looking at the 200-period moving average of 30.91, where it's hit in the last 6 months. Well, 6 weeks. It's hit that line from coming from the upside to the downside, and then from downside to the upside. Magnet line. All right, I think we're done with that. Next question came in. Where was it? Okay, so this is what I'm looking at here. There was a divergence. There have been a number of divergences that hadn't happened for ages. When I say ages, I'm actually talking years. So when you go to the Dow chart with my yellow background, this is the Dow chart that that has, for anything I want to put here, I draw in lows that were made by the on-balance volume, if they coincided with lows of the price that we're following, and highs. Well, it turns out that we made a high right there, and this is where I was saying that I think we've got a Chapman dark news index action, and it's to do also with yields, and that was going into that 27th of November high area. And I said, this is very interesting because look what we've got. We've got, first of all, we've got price going up, but for the very first time in quite a while, we've got price going down. When I say quite a while, I mean from April of last year. You had the divergence with the prices going up and the on-balance was going down. And then you made a low, and there was a lovely move, a dreaded H, successful, went higher and higher and higher, and that was the low, in fact, right up until the December 4th high in the Dow. Wait a minute, we've just got the same thing. Rising price, low on-balance volume. Wait a minute, now we've suddenly, from this low that should have been the low, we've got an arching over, and we're making lower lows, but a higher high in the on-balance volume, higher lows. Another divergence. I'll try to put it together when we come back for the next segment. I'll be right back. Basil Chapman, Tiger Conditions Hour, and the Dow is down 61.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, we're back. So we're looking at this divergence between on balance one, the blue line, and the price itself. And the 9-period moving average is pink, so it's negative. And it's going to take a lot to move it to green. The Dow has to go up, I think, at least another, excuse me, it's at 43,104 right now. I would probably say 43,400s to start to get that pink 9-period moving average green. So that's one chart. Next chart that I wanted to show you is this. Got it right here. And this is the Dow. I don't want to go through all tomorrow's Technical Friday. I'll do that. Just wanted to show you that the time sequence between the March high of 2024 and the late July high, which was right there. I should have changed that. That was on the 31st of July. Matched 31st of July almost to what I had put the 29th of November as a matching time sequence, right? This has got nothing to do with resistance or support. This is just time. I wanted to put it in so it was distinct. Then you got the Chapman Wave inside track repellent zone. And look what happened. Got repelled. I have the dark news, Chapman Wave dark news index, the DNI, with an internal high and a residual high slightly higher. But that was a C, so that confused me. Otherwise, we would have at least been looking at the short side, especially since it then coincided with the top of the S&P at peak D and the Qs, etc. So look at this. It came down sharply, and I said, I don't know if I can call this an internal low and a residual low, even though you're going to it could get a bounce, because if the 9-period moving average has so far to go, look at the difference between when you got internal low and residual low before. Either there was a green or just a slightly pink 9-period moving average. So it's going to take a lot of work. Then it deflected lower. So I said, I'm going to think of this more as the internal low here, and maybe there's a residual low. And every technique that you have, I mean, you can see that. I'll go into tomorrow about cycles. But at this particular point, all we've got is a very strong bounce, and it's matching this whole concept of earthquake and aftershock. Lower this time. It was lower there. It was lower there. It was lower there. It was higher there. So it happens. But it's that concept that you've got something of force, and then there's a follow-through, and that follow-through is really important. The fact that we closed yesterday above this high right here on the 6th of January of 42,115 is very important. So I call this a work in progress. I love V-shaped patterns. but it means that when you get the V-shaped pattern, you want to see something powerful, and then maybe a little bit of a digestive phase, maybe a day or two, but you've got to very quickly go to higher highs. And that's what's going to happen either Friday or Tuesday. So that's why I said after Jacob's interview, which was on the Dow, which is right there, Tuesday, and I said to him, if we don't make that V-shaped pattern, a V-shaped pattern is when everything you try to buy just gaps up and you just can't get it for days, and then it's way higher than when you originally saw it at the low. That's going to be, and the next day was yesterday, and we gapped up and we had this huge candle, and now we've given back some. So now it says to me, MACD's turned positive, stochastics improved to 51. You remember where it was under 20%. So that's good. The relative strength, this little gray line here, and the Dow has improved a lot. The 9-period moving average is close, but I think it really has to get to the 43,400s before you can start to see it get close to. Once it goes green, that's a really big deal, and it hasn't. Weekly charts are very, very positive, and that's why I'm saying this is a work in progress. Now, I don't see this at this moment as the kickoff to go to an all-time high. I could by next week. I'm just saying I don't see it right now. We are prepared for it because we were very fortunate. We went along at the open on Monday at right at the low. So we've got, that's what I was talking about. If you can do that, and that's what I've always tried to do at the highs, try to get so that you've got some kind of flexibility when there's that volatility. This one was straight down, but this could show volatility. Okay, and I'll show you just really quickly, SPX.X. There we go. There's the S&P. That has had a V-shaped pattern before, and that's failed. It's had it 3 times. This is the 3rd time. But this time, look, the 9-period moving average failed to cross positive. It deflected lower. This time, we're not even close to crossing positive. So therefore, you've got to see a move towards the 6,000 in the S&P to really have some kind of confidence. So I don't like to overconfidate, but I'm just saying, if you get the trigger to go long, how the price you're following pulls back on, it's not the upside, it's the way the upside is treated when there's a breather, when there's a pullback. And if there's just a minor pullback here, and by Tuesday we're up, moving higher, and that would include, and I don't like the divergence. I don't like the QQQs being so weak, not even breaking yet the 200 period, the down Chapman wave inside track repellent line. I don't like the fact that the Russell 2000 had a fabulous session yesterday. In fact, for 2 days, in a way, it was kind of leading the market from the 200 period moving average support. Plus, I didn't show you this. Where did I have the chart? I didn't. I'll show you the chart one more time because I forgot to talk about it. It's at this chart right here. Yes. So this is the Chapman wave inside track propellant zone. That's another reason why when I did my homework on Sunday, I said, I think we're going to have a pretty nice rally. You got inside track. You got a green candle for Friday, Monday, Tuesday, yes, Wednesday. So there was this. Look, it was repellent there. Why wouldn't it be a propellant? Okay, let's get back to our news here. Okay, there we are. So yes, good. I want to see if I've just covered the questions that I had. I did that. Yes. So GOLD is Barrick. Barrick Gold. Now, did I type that in the wrong place? Yes, of course I did. GOLD, come on. Yeah, so GOLD Barrick is trading right now. It's not a great chart. Look, you went to a peak A, then a peak B, then a peak C, all the way to a C, and yet it's only gone from 15 or maybe just over 15 to 16 something. You want to see really strong moves to the upside. Look, when it does just a little bit ABC, yeah, you want to see something like that. Look, there's an ABC, right? A, B, C, and then you get a big pullback. So Barrick Gold trading right now at 15.90, up 6 cents. It's okay. Look at that same thing. Remember we did the Dow where I said that was the bottom when you had the Chapman wave inside track propellant zone. Look at this as a repellent zone right there. So it went to a high back at 21.35 the week of the 25th of October, pulled back sharply, and each bounce has been pretty weak. I think this is very selective. I think it's better to be in gold itself. So we have the PHYS, which I used to always look at the IAU, which trades at 1/3 the price of the GLD, which trades at 1/3 the price of spot gold. This, in a way, is much better because it's a spot physical gold units. Our friend in the Dan Fletch had pointed it out some time ago, and I did some homework on it, and I felt, it's a good point, because look, if you go to the IAU, it's pretty much the same chart pattern.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th, for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
We talked about this the other day, and I can't remember if I did it, which was the IAK, which is the iShares US Insurance ETF, went to a peak D in the monthly chart. Slipped under the 9-period moving average, but then bounced back. The MACD's tipping down, but it's still strong. Stochastic's still strong at 86%. Weekly chart went to a peak D at 139.08, pulled back quite sharply from the November high. But look at the green candle after everything that's gone on with the fires. And look at this. This is the leg A in the weekly. Now, I want you to just quickly do this before we wrap up. You see the strength from the 200-period moving average? Look at something like a caterpillar from the 200-period moving average. Look at that. Look at the strength. I don't know if it's going to be there, but I'm just going to put it in. DD, no, DuPont, but Dow Chemical. Did that do it? Yes, Dow Chemical. Nice, almost a crossover in the 914, with the MACD still very strong. So this is Dow Chemical. So the reason why I said I want to see what happens by Friday in the weekly charts is that these stocks that I featured 2-3 days ago, and I said, I can't believe how strong some of these have come off lows, either 200-period moving average or multi-week, even yearly lows. And that just says that we've got possibly a new series of, let's look at PAVE as we go to our final segment finishing. Yeah, look at PAVE, right off the 200-period moving average, the global ex-US infrastructure. So I'm saying I'm not very, very negative and positive. I'm selectively positive. Our stocks that have done well, we've added to them, or we try to keep them as long as we can, and that's telling us that what has worked and is continuing to work should continue further. The ones that did work and then they've taken quite a spill and they're not rallying, try to avoid those. But the ones that are taking a spill and now they're starting to rally, look at them, because it's just a new sector that in this rotational correction could start to work. So I'm going to hand you over to Steve Rhodes. Should be a great show as always. And check out my opening call. There's some very nice positions. Of course, we went long, aggressively long, small position at the open on Monday. So